The online sports gambling market is continuing to gain attention, and Penn National Gaming is right in the thick of this growing trend. And joining me now to discuss Penn's strategic initiatives and outlook for the year is Penn CEO Jay Snowden. Thanks for joining me today, Jay.
Happy to be here, Alyssa. Thanks for having me.
So what would you say are Penn's keys to success over the last year? From an investor standpoint, the stock has had an incredible run. So what are your keys to success?
Well, look, the last year, think about, what we've been through. COVID hit about a year ago now in March of 2020, and we were mandated to shut down all 40 of our properties across the country. And so even in your worst sort of doomsday scenario planning around risk management, we just didn't have shut the whole company down for 3 months and generate zero revenue. So it was a scary moment there in March and April. Our stock went from $30 down to $4 and something. And look, at the end of the day, it always boils down to you have to have great people, and you have to have a great strategy, and you have to be able to execute. And so I look at the last year, and I couldn't feel any better about the team that we have at Penn, the partners that we have at Barstool. I will tell you that even in those darkest of days in March of April of last year, there was just never a feeling of doubt. There was never a feeling of anyone wanting to throw in the towel or give up. The resiliency that I witnessed firsthand with my team and with our partners at Barstool, it was always, we're going to get through this. We're going to be fine. And we just have to get to the next day and get to the next day. And, that mentality and that resiliency, I think, really helped us a lot. And once we were able to start to reopen our properties, initially in Mississippi, Louisiana in May, and then a whole slew of states in June and July, business results were really strong. People had, there was pent up demand, cabin fever to get out of the house and do something that was safe and fun. We obviously offer that in our land-based casinos. And then fast forward to September, and we were able to launch our Barstool branded mobile sports book, Barstool. And Pennsylvania was the first state. We were late to the game, about 15 months from everybody else who were there at the starting gate at the same time. And really proud of what we've been able to do in the first 6 or 7 months being live in Pennsylvania. We went from not having any market share to being firmly in the number 3 spot behind DraftKings and FanDuel. Then we fast forward, we launched in the state of Michigan in January with our online sports book, and then online casino in early February. And then we just launched in Illinois prior to March Madness. And the demand has been very strong. Barstool has a really strong presence in Chicago. So you package all of that up, and things just sort of worked out for us. We were able to take advantage of the momentum we had. We did a couple of capital raises in 2020 to really shore up the balance sheet and give us the dry powder that we needed to be aggressive and opportunistic as it relates to M&A. And so, we're busy now thinking about all the things that we want to do and can do to further cement the strategy and make that moat that we've built deeper and wider than it's ever been.
Mm-hmm. And you talked about the relationship with Barstool, and it's been a little over a year, and that ended up being a very key partnership for you ahead of the pandemic with this big pivot to digital that you really had to pay attention to.
Yeah, we knew when PASPA was overturned, Alyssa, in May of 2018, that this was a real transformational opportunity for the company, really for a couple of reasons. One, we operated in, and still do, in more states than any other gaming company in the United States, and we're up to 20 states now. And when PASPA was overturned, PASPA being the law that made sports betting illegal across the country other than in the state of Nevada, but when the U.S. Supreme Court overturned that decision, it became a states' rights issue. And so this footprint that we have across the U.S. was best in class. And so we knew it was an opportunity for us to do two things. One, monetize the footprint. And we have, in so many of these states, we have multiple properties, and then therefore you have multiple licenses, or skins as they're called in the industry, to operate. So we did an RFP, and we ended up finding some really good skin partners like DraftKings and Fox Bet, PointsBet, The Score, since then BetMGM, Unibet. So we've got a number of skin partners. And why that's important is because in order for them to get access in some of these states, they have to partner up with a land-based casino operator. And in return for giving them access, we get rev shares. And in some cases, cash up front or equity up front. In the case of PointsBet and theScore, we took equity up front, and the equity positions, which were originally worth about $15 million, are now worth close to $200 million in PointsBet and theScore. And then step two was, how are we going to, really pivot the company and lead with digital for the long term, because that's where the industry is going as it relates to both sports betting and online casino. And we knew that we had the footprint. We know how to operate both sports books retail and casino retail. What we were missing, of course, was a brand to lead with from a sports betting perspective. We have great casino brands across the country, but no sports brands. And we also needed access to the audience that is, most highly correlated to sports bettors, which is the younger men aged 21 to 35 years old. Most of our land-based casinos skew a little bit older, 40s, 50s, 60s, and tend to skew more female than they do male. When we met Dave Portnoy and Erica Nardini and Dan Katz, Big Cat at Barstool, we both told the story before, but you knew in the first meeting that there was a deal to be done. We didn't have lawyers and bankers in the room, so we really got at what matters to you. And what mattered to them was leading with their brands. We wanted to do that. And I think others that they had talked to wanted to partner with Barstool, but maybe didn't want to go all in on the brand and lead with the brand. Whereas I'm Boston based. My wife's from Brockton, Massachusetts. We've been familiar with Barstool for 15 years. And I think the brand is really an amazing story of what it was when it launched in 2003, 2004 to what it is here in 2021. Because of COVID, we actually haven't been able to do one of the things that Dave and Erica and Dan and myself, my team, are most excited about, which is to activate the audience of Barstool on-prem at our casinos and inside our sports books. We've converted all these sports books to Barstool branded, but we have capacity limitations because of COVID. And so as those capacity limitations continue to be relaxed or eventually go away, I think you're going to see the last part of this story, and maybe one of the most compelling parts, which is to bring that audience to our facilities and really give them, a reason to engage with the audience at Barstool, the personalities, have great fun at the events and golf tournaments at our golf courses. So we've got a lot of great plans. And I think COVID, in some sort of odd way, really acted as an accelerant to our strategy. I think it was going to take us longer to really educate the investor community that this is a pivot that we knew we could make and we were ready to make. And COVID just moved everything along and advanced it. Maybe over the course of 6 months, it would have taken us about 3 years. It just accelerated the whole digitalization of the industry and of the company faster than I think anybody was prepared for.
Yeah. And speaking of the industry, can you talk to us a little bit more about the competitive landscape here and how you feel Penn is positioned within that from both the online sports gambling perspective and those physical casinos?
Yeah, our competitive landscape, Alyssa, has changed quite a bit. It was always typically the, core brick and mortar casino operators, Caesars, MGM, Boyd, Red Rock. And now it's sort of the set has really grown, and we consider the DraftKings and FanDuels and Entain, some of the large European operators, Flutter, those are very much a competitive set as well. And then also because we have this media asset at Barstool, we definitely look at the media landscape and competition there as it relates to podcasting and sports media, sports content. So it really has evolved. I think you're going to see further convergence happening over the course of, the next couple, 2, 3, 4 years. You're going to see media and sports and gaming continue, I think, to come closer together, and throw tech in there as well. Sometimes people don't see the forest through the trees around what this might look like 3 years, 5 years, 6 years from now. It's like this mad arms race to spend, who can spend the most money. And everybody talks about handle market share as all anybody cares about month to month. And stocks like ours, which are, there's high beta and you can move 20, 30% in 30 days, no problem. I think that we really need to take a step back and look at what are the strategies, what makes each strategy unique. And we believe ours is truly differentiated because we have this fully integrated and compelling media asset that is part of our digital offerings. And one thing I know is that regardless of the industry, and certainly today more than ever, Alyssa, is that content wins. And we know we have the best content around sports betting in the space, and it's not even close. Sky Bet in the UK, I think, is a great example that had a fully integrated technology and media strategy with their sports betting. And, early on, they were mid-single digit market share. And over time, it became high single digit, low double digit, mid-teen, high teen. And you look today and they're the number one player, or certainly in the top three on any given month, any given year from a market share standpoint. We feel like we have the right strategy, the right business model, and we have structural advantages around the skin agreements I mentioned to you, where we don't have to pay for access in 20 states like everybody else does. And then we actually have rev shares coming in because we have skin partners in all of these states. So, and our customer acquisition costs because of that relationship with Barstool, we don't have to spend to the levels, not even close to what anyone else is doing. This is not an industry, in my opinion, like credit cards or mobile phones, where the switching cost is actually quite high because you use your phone for everything and it's linked to your accounts, or your credit card is, you're doing your streaming services or all go to the same credit card. Like, that's pretty high switching costs. And I think that in the US, people are going to end up just like in the UK, having 3 to 5 sports betting and online casino apps on their phone. And I think whoever has the best products and the most compelling content, which we think that we're best positioned to do, is going to win out in the end.
So needless to say, you're pretty bullish on the company's outlook. How do you see the relationship with Barstool evolving over the course of the next several years? Because it sounds like that's where the future is, and that's what's really driving the growth that you're expecting to unlock in the next year.
Yeah, we have a great relationship. It's long-term. The way that we structured this, Alyssa, is that Dave and Erica and Big Cat and many others at Barstool, but let's just talk about those three. They're all signed up for 5 or 6 years, the three of them. And, we're already in conversations around what does the next sort of extension look like, because I think everybody's really pleased with how things are going so far. And we acquired Barstool to be Barstool. And honestly, if anything, it's what are the investments that we can make, whether it's capital, it's resources, it's just the energy within the two companies to help them grow, because the bigger Barstool gets, the wider the funnel becomes from a customer acquisition standpoint for Penn and Barstool. And there's so many different ways to engage that audience and to monetize over time. And I think sports betting and online casino is just one or two of those reasons, but or sort of opportunities. But you think about alcohol and packaged goods, you could see, One Bite frozen pizzas and Walmarts and Targets across the country. You could see us owning our own sort of product line within alcohol through Barstool over time. There's so much we can do. And so I think the partnership, as good as it is today, is just going to get stronger over time because of the brands and how we can really help one another. Like we talk about this all the time, that, Penn by itself maybe had a value of X and potential of Y, and Barstool by itself had value of A and potential of B. But then you put it together and you just blew through those sort of ceilings that you might have felt previously. So I think that there's so much more that we can do to support them and make their platform bigger. And there's so much more that Barstool can do, like the on-site, on-prem activations, to make our core business healthier and bring younger audiences to our core business. So, as good as it is today, I think that you're going to see this evolve in really strategic, healthy ways over the coming years.
Thank you so much, Jay, for your insights today. I definitely learned a lot about what's ahead for Penn. It sounds like there are a lot of exciting things in the pipeline, and we'll definitely be watching. Thanks again.
All right. Thanks for having me, Alyssa.
Hi there. Thanks so much for watching Investing Strategies on our YouTube channel. If you want more executive interviews and analysis of key trends to watch, make sure you hit the subscribe button so you can stay up to date.